Now, shifting gears, keeping things moving, let's talk about our main focus point today, which is about perhaps the most watched investor, I would say, and that is Warren Buffett, the Oracle of Omaha. And we've covered stories about Warren, Mr. Buffett. We're not really on a first name basis. I don't know him. He doesn't know me. Pretty frequently on this show. And more recently, those stories have centered around the fact that Berkshire has been raising cash. And so the reasons why they've been raising cash are debatable, right? There's several schools of thought here. One camp says that they believe the market to be overvalued, and that could be the case. Though historically, he has never been the best market timer. But some people think that he's been holding his nearly $300 billion cash stockpile to reinvest should things start to turn. There's also the school of thought that realizes that even he cannot beat Father Time, who comes for us all. And so by raising this cash, by having it prepared for his successor, it allows Berkshire to be more reactive and active as well in seeking out good investment and acquisition opportunities. But here are the facts, right? For the past 9 straight quarters, Berkshire has been a net seller of equities. Their Apple stake has been reduced from 6% to 2% in that time. And there seems to be no rush to invest. No rush at all whatsoever to inject that capital back into the market. And so I'm of the opinion that maybe it's a little bit of both. Maybe he sees that valuations are very high across the board. Maybe he knows that, he's transitioning soon to Greg Abel, and he and his team should have the ability to steer the company that will outlive Warren, that already has outlived Charlie, deeper into this century. Now, here is some credence to the valuation argument. And I have clients, multiple, who have asked, who like Berkshire Hathaway and have asked, should I buy more Berkshire? And I always say the same thing. Because Warren Buffett is better than I am at investing. And do what he does. Is he buying Berkshire? And the answer is no. Berkshire's repurchasing stopped in Q3. And so this is reinforcing the idea that at least he thinks Berkshire's a little overvalued if he stops buying it back. And the likelihood that the second order effect is, then his perception is that most of the market is overvalued. But I want to give caution, right? I want to also make sure that you aren't taking one man's actions too seriously. Though he is a very serious person. All it is telling you, all that it really should tell you, is to be more cautious. Again, we know historically, if you look back 30 years, he has never been the best at market timing. Market timing is very difficult. But anytime somebody as important as he does something such as this, it should make all of us take a step back and think and reconsider, are we doing the best to position our portfolios defensively should things start to change rapidly?